Hello, I'm Sami Zeidan. This is Counting the Cost on Al Jazeera, your look at the world of business and economics. This week, 2020, a year to forget. Can the world bounce back from the worst economic contraction since World War II? And as rich countries corner the vaccine market, what kind of global recovery will there be without the world's poorest? And first into lockdown and first out, China sets a course to become the biggest economy this decade. 2020, not a year that many would like to look back and remember with any fondness, shall we say. Hundreds of millions lost their jobs, many millions succumbed to poverty, and more than 1.8 million people died from the pandemic. The global economy contracted more than at any time since World War II. With vaccines being rolled out in many rich nations, there's a real sense of hope that there'll be a strong recovery this year. Just to keep economies on an even keel, governments and central banks have spent a staggering $12 trillion. As countries stumble from one lockdown to another, global debt has soared, though, to $277 trillion, more than 3.5 times the size of the global economy. Governments that aren't able to turn to international markets for money have turned to the International Monetary Fund and World Bank. The IMF has provided about $100 billion to more than 80 countries. And development banks led by the World Bank have issued $75 billion. Hope of a fast vaccine rollout could see a sharp bounce back to the global economy. After a 4.4% contraction, the IMF is predicting growth of 5.2% this year. One of the best performing economies was China. It's already begun setting its sights on becoming the world's biggest economy this decade. As China becomes more self-resilient in the face of a US trade war, a new Biden presidency is unlikely to relent on tariffs. So what can we expect from 2021? Well, let's bring our guests into the show. They've got decades of experience in guiding their clients through the economic and political landscape. We have joining us from London, MacroHive Chief Executive Bilal Hafeez. Also from Hong Kong, Yeung, Investment Director for Fidelity International. And from Wiltshire in the UK, Donovan, Chief Economist of UBS Global Wealth Management. Good to have you with us, everyone. Let's start with Catherine in Hong Kong then. So why has China done better than the rest of the world? It's one of the few economies that is estimated to have grown, actually, in 2020.
When we have been looking at markets, especially last year and even this year, there are three key drivers that we've been focusing on. So the flattening of the COVID curve, the pace and sustainability of an economic recovery, and finally policy response and implementation. And really, China's got a tick in all three areas. So in terms of the outbreak, it really has been contained, even though we do see the occasional flare-ups, albeit the borders are still generally closed. Economic recovery-wise, we've seen a pickup, manufacturing, even in the retail sector, the services sector, exports have done well. And then policy-wise, the PBOC really has bucked the trend versus other central bankers. So they've taken a very disciplined, less aggressive approach in terms of supportive easing measures. And it's likely that should we do see some hiccups in 2021, they still have the tool set to support the economy should they need to.
All right, interesting. So controlling your borders, controlling your manufacturing base, controlling the finances. Paul, are we saying that control and authoritarian governments are sometimes better than liberal democracies in managing an economic crisis like this?
Well, I think it depends on the nature of the crisis. And of course, we've seen liberal democracies handle this crisis extremely well. If we look at New Zealand, for example, I don't think you would even begin to describe the government of New Zealand as authoritarian, and they have managed this situation very well, and their economy is showing the consequences of that. So I think it's more about the preparation for the crisis, the speed of the response, and of course, in part, of the compliance of the local population. That's also a key factor, whether you can get your citizens to agree to the restrictions and abide by them or not. And obviously, the United States has had some problems in that regard.
Interesting. Bilal, we've questioned Chinese data before. Are we doing that right now?
Well, I think there's always a big question over Chinese data. That said, though, when you do look at other countries' data in relation to China, so for example, if you look at other countries' exports to China, so you use other countries' data in relation to China, you do genuinely see an improvement in the economic picture. As for the COVID numbers, there's, the way the COVID numbers are reported in China does bring some questions as to how they are reported. Nevertheless, if you do look at the level of activity in the economy, the level of movement of people across the economy, it does suggest that at least the overall, the high level picture of the COVID situation in China is accurate.
Okay, Catherine, talking about China and economic activity, they're aiming to double the size of the economy by 2035. It's a big goal. Is it possible, Catherine?
So Xi Jinping announced this at the end of last year in his 5-year plan, or the government's 5-year plan. So achieving that kind of growth, we would have to see China grow at roughly 4.7, 4.8% per annum, which is probably somewhat achievable. Don't forget the structural story behind China remains very much intact. And by that, I mean higher incomes, household wealth, the shift urbanization, the rise of the Chinese consumer. And this is why there's such a focus from a government level in terms of ensuring that growth is really underpinned by the domestic side of things. And this is why we call it the dual circulation policy. So really ensuring that there's a healthy employment market, that we continue to see this urbanization, and that we alleviate poverty as best we can in China.
Catherine, what would the price of that be? Will we be looking at a debt level of something like 90 trillion or something?
Yeah, but don't forget, in terms of the debt level, there's still an outstanding debt situation in China, and that hasn't gone away over the past 2 years, even though the markets have remained very, very buoyant. But a lot of the debt and some of the defaults we've already seen, which again, we shouldn't be surprised about, have been very much managed by the central government. So in terms of how we're going to achieve that growth over the next 10 years, 5 years, etc., we're probably going to see some tax reforms being introduced, and really, again, this focus on this domestic economic growth coming through. Interestingly, though, when we look at the savings rate in China, household savings rate, that is, it's gone from about 30%, which has been hovering over the past sort of 3-5 years, to 37%. So we're not seeing household debt really increase like we are seeing across other nations.
All right, Paul, few doubt that China is on its way to being the world's biggest economy soon. Will it happen this decade, according to the traditional GDP measure?
Well, I think that one of China's challenges, and one of the reasons I'd perhaps be a little bit skeptical about that sort of narrative, is that China structurally is very well positioned for the third industrial revolution, the way its economy is positioned. It's going to face more challenges in the fourth industrial revolution, because effectively it's got to say, well, yes, this has worked very well for the last quarter century, but it's not going to work at all in the next quarter century. Dealing with a world which is more localized, where technology actually isn't what's important, it's the implementation of technology, which is very much about human capital and labor flexibility and so on and so forth. So I think China has got some challenges ahead in adapting its economy, accepting that the model that has worked extraordinarily well over the last quarter century now has to be not entirely thrown away, but certainly dramatically revised if it's going to deal with some of the very, very significant structural shifts which lie ahead.
Revised how, Paul?
Well, I think that we need to see a focus on higher education in particular. China has benefited over the last few years by having a relatively high proportion of students who studied overseas returning, bring their knowledge and expertise back to China. That may be more problematic in the future. We're seeing already restrictions on student visas, for example. The focus on exports has clearly got to shift. I think that localization is not going to happen overnight. I mean, the evidence suggests that it's something which gradually occurs over sort of a 4 or 5 year period. But we are clearly going to be moving towards localization because it just makes economic sense to do that. And with that, again, China has got to start focusing on producing for its domestic economy and perhaps less about producing for international economies.
Interesting. That brings us kind of back to the point Catherine was mentioning. And Catherine, I'm wondering, do you think, talking about restrictions on China and focusing on the domestic market, do you think a Biden presidency is going to remove some of those tariffs that I guess have, it's only pushing China further in that direction of being inward looking right now?
The status quo is probably not going to shift dramatically. And really, when we look at most economies around the world, a lot of them are recalibrating or reassessing their trade agreements with each other. But getting back to Paul's point about the focus that the Chinese government has in terms of the structural growth story, this is why the government is placing such an emphasis on innovation. And it's not just in the tech sector or consumer-related names, it's across all segments, materials, industrials, energy, etc. They know that they have to really increase their R&D, the education, as Paul alluded to really climb up that value chain and continue manufacturing in that higher end space.
All right, let's broaden it out to other trade issues, not just between China and the US. What do you think, Bilal, we can expect from a Biden presidency on trade issues with others, the EU and so on? Trump has left Biden with a lot of leverage, you could say.
Yeah. I mean, it's obviously Trump sort of disrupted so many relationships, and instead moved away from a multilateral arrangement with allies and much more towards bilateral arrangement and an antagonistic relationship with allies. I think Biden, at least from what he says, will try to go back to what we had during the Obama era, in the sense that there will be, or not just the Obama era, the earlier US position, which is to support allies. So that's the EU, Japan, countries like that, try to engage with them to, contain other more adversarial relationships, such as with China. So I do think there will be more of a multilateral approach, and which will mean a reversion to what we saw before President Trump. But the difference this time is I think the antagonism towards China will continue, although the form in which that's expressed will be somewhat different to the way President Trump engaged with that. So I think the key thing for Biden will be to try to engage Europe to have a united front in relation to China.
And Paul, building that united front with Europe, will the price of that be dropping some of the disputes, the tariffs which the US has slapped on the European Union over things like aircraft subsidies?
Well, I think there's an interesting point here, of course, because the Treasury Secretary nominee, Yellen, is, of course, a highly competent economist. And we haven't had a highly competent economist as Treasury Secretary for a while. Now, the whole question of tariffs, I think it's very difficult to see Yellen intellectually, as it were, supporting tariffs. I think she knows they don't work. I mean, trade taxes just don't work. And so I think that there may be some shift about how the Biden administration tries to apply trade policy. We know that the trade taxes are going to stay for the time being, but I think that with Yellen in charge of the Treasury, there may be a shift of emphasis. Yes, perhaps work in a multilateral way. We know, for example, on digital taxes, the Biden administration is quite likely to reopen the OECD moves here and try and come to some kind of multilateral agreement, which is not the way that the Trump administration has been working. And so we could see some progress there as well, I think.
All right. We're kind of looking at things, though, from the perspective of the US policy towards the EU and mending its relationship with the EU. Catherine, does the EU how far does the EU, I guess, want to look towards faith in Washington, given what we've seen going on in the EU-China investment deal? What does that tell us?
I think that deal was really telling and very beneficial for a lot of the European economies. So, again, I mentioned my earlier point about a lot of economies are reassessing their trade relationships with others. I think this is probably going to be a key theme for 2021 in this regard.
All right, Bilal, looking at Biden's new economic team, he's got more women, people of color, minorities. Does that, do you think, indicate, in terms of the Biden economic policy, more of a prioritization of some of the economic challenges and issues which, for want of a better word, we could say the minorities face?
Yeah, I do think that is the case. And, it's perhaps not just about minorities. It's probably more related to a larger issue of inequality, which has been the challenge plaguing many, many economies. And each political party has tried to address it in different ways. So President Trump, followed a very, anti-immigration sort of stance, towards that to try to address this. And And so the Biden administration, I think, will try to tackle this inequality issue in multiple different ways. One, for example, will be through various government programs, increased fiscal spending. These checks that we've talked about during the pandemic. $600 to $2,000, those sorts of things. There's questions around whether student debt will be forgiven or not. So that's another thing that's been quite onerous. There's healthcare reform, which is a big impediment for people at the lower rungs of society. And then there's kind of a larger issue around climate change as well. So while this is not directly related to inequality, it does kind of go to a broader issue on the left side of politics, trying to address climate change as well.
All right, Paul, bring this all together then for us, what we've been saying so far in the show, an attempt or an effort maybe to address inequality, global trading powers trying to make up to a certain extent, multilateralism coming somewhat back on track. Does this mean we're looking at a bounce back for global economic growth, or do you think unemployment is still going to be a challenge?
So I think we are going to see a bounce back, and unemployment is going to be a challenge. It's a typical economics answer. You're one hand and on the other. You get a bounce back because last year was an aberration. And as we move out of the period of restrictions in Europe, for example, in the probably early second quarter, we start to see those restrictions softening. As consumer confidence comes back, you will see, I think, a far more rapid acceleration of growth than perhaps is still expected.
Do we bounce back, though, to pre-corona economic levels, Paul?
Well, no, that's where the unemployment problem comes in, because what has happened with the pandemic is, in my view, this is accelerating structural change in the economy. Structural change was going to happen anyway. The fourth industrial revolution was already underway, but it's being accelerated by the pandemic. Now, the issue there is that industries that were in gradual decline are now in rapid decline, and you're creating unemployment and so forth and spare capacity. So I think it is unlikely that we are going to be getting back to 2019 levels of economic activity until probably 2022. And for me, the bigger issue, it's not really the cyclical recovery, because the parts of the economy that are able to recover, I think, are going to recover just fine. The problem for policymakers now is how do you deal with the structural challenges of the employment in dying industries, for example? How do you go about retraining? How do you go about rejigging your economy to make the most of the way the world is going to work, not the way the world has been working?
I'm curious to know, Bilal, with this kind of structural shift accelerating that we're talking about, what does that mean for the green economy? Does it mean we accelerate quicker to a greener economy than pre-COVID expectations? And if so, why?
Yes, I think it does. This is probably the one area in which, if we're in an environment of structural change, this is the one area in which the government can step in and try to support and grow the segment of the economy related to the green sector. And so this could be, one of the ways where, as Paul was mentioning, there will be people who lose their jobs in this fourth industrial revolution. And those people could be retrained into the green energy sector. I mean, at the very basic level, while we kind of think about technology and green and renewables and so on, there will be an infrastructure build that's required, to build a green energy system, and that will require construction, that will require building, that will require manual labor as well. So I think this will be a big push by governments at all levels to try to encourage this part of the economy.
We need something of a reality check here. A lot of countries have borrowed a lot of money during this crisis. How's that going to be paid back? Is austerity going to cover the bill?
That's the biggest question, and probably the uncertainty which the markets, especially last year, were probably not really factoring in, given the highs many equity markets were posting. I think inflation is also going to come back on the table. So whilst oil did have a fall at the first half of the quarter last year, it did rebound. And in fact, soft commodities showing some good price movements in terms of strength. So I think definitely inflation is something that hasn't been discussed, but will come back on the table. And as you rightly pointed out, questions and solutions about all this outstanding debt and who and how we're going to wear it need to be addressed.
Paul, how do we ensure that the poorest nations don't miss out on growth when the reality is it's the richest nations which have kind of cornered the vaccine market right now, haven't they?
That's certainly true. It's a complicated issue because, of course, the virus itself doesn't actually do the damage to growth. It's fear of the virus that is doing the damage. So if you create an environment where your fear is more contained, then potentially your growth comes back. And you can see this, for example, in the United States, which has far fewer restrictions and therefore has stronger economic activity. I mean, the case numbers, the mortality rate in the United States is just as bad, if not worse, than Europe. But because the fear level is different, you end up with a different economic response. So I think when we're talking about the vaccines, that will reduce fear in Europe and allow normalization. But it may well be that in emerging markets, we still continue with a regrettably high caseload. But people adapt and get on with their lives regardless, in which case, as we've seen with the United States, you would get stronger economic activity coming through.
Catherine, do we expect central banks then to continue to provide huge amounts of liquidity? And if so, for how long?
Probably, especially if we don't see a pickup in an economic recovery from a global perspective. But as I said, if inflation comes back, then we would have to start thinking about monetary policy means. And this is all really ex-China, by the way. So as we highlighted earlier in the show, if we're to see improving GDP growth in China at whatever level, it will probably mark the point where you start seeing the PBOC move towards more of a tightening stance, whether it's about the liquidity situation, because again, we still have this outstanding debt situation that we need to resolve in China. But they're at a different point versus most other central bankers. Now, I mentioned at the start that we do believe that the PBOC has the necessary tools, both fiscally and monetary, should we do see some downside in terms of economic global growth. But in general, we're probably going to see in the foreseeable future central banks around the world, ex-China, continue the path that they have been on.
All right. And Bilal, we've seen in China stocks adding almost $5 trillion US. It's about the size of the Japanese economy, isn't it? Finishing the year on record highs. We've seen that, with markets around the world. Is this reality or are they detached from reality?
Yeah, I guess that's the big question. I mean, my kind of sense at the moment is that it's a bit of both. My bias is to say that it's not entirely detached from reality, in the sense that the structure of the stock market is different from the structure of the economy, number one. So what the stock market represents isn't a direct reflection of the real economy. And if you look at the components, say if we take the US or even China, big tech is a big component of these indices. And big tech in many ways is kind of capturing all the sort of the positive gains and structural changes that we're seeing in the economy. There's a greater adoption of technology. There's a greater requirement for sort of big data, networks, and those sorts of things. And these big companies are all kind of capturing those sorts of things. So in that sense, it's not detached from reality. Moreover, we have kind of the fundamental issue of, as you said, interest rates are incredibly low. So as a result, kind of the value of those stocks, starts to go up. Those dividends that companies can give you, look more attractive with interest rates so low. And there's a basic issue of asset allocation. Investors are trying to, capture some kind of return. And if bonds are giving you negative rates, as they are in many cases, then the only alternative really is equities.
All right, it's at that point now in the show. We've got a minute left, so I'm going to ask everybody to get out their crystal ball. Let's start with Paul and ask everyone to give us a prediction of what we think the economic landscape is going to look like for 2021. Have you got your crystal ball ready, Paul?
So I think it's going to be a softer first half as we still deal with the virus and the rollout of the vaccines. Probably a stronger bounce back in the second half. People always underestimate the ability of humans to adapt in the face of adversity. And I think that will give us a stronger bounce back.
OK, a positive note there. Is that shared by you, Catherine, in Hong Kong?
It is indeed. And just from a market perspective, I do think that China is going to outperform both in an absolute as well as in a relative sense, albeit I do think we're going to start moving away from this very crowded trade that has emerged, not just in China, but around the world, like, for example, as we've been talking about the big tech names, the Tesla, et cetera. And you will start seeing diversification into the unloved sectors, into names that are still delivering on their earnings, but have been ignored because of the crowded trade mentality.
All right, interesting. What does your 2021 vision look like then, Bilal?
Yeah, I'm going to have to be somewhat boring and agree with Paul and Catherine that I think in the end we'll have quite a positive, year, especially as we go towards the second half. I suppose the one kind of contrarian view I do have is I don't really think inflation will be much of an issue this year. I think inflation will remain quite low over the course of this year, mainly because unemployment is going to be very high, but also because one of the largest drivers of inflation, the service sector, doesn't really have much pricing power, especially in kind of a post-pandemic world.
Let's thank our panel then. From London, MacroHive Chief Executive Bilal Hafeez. From Hong Kong, we had Catherine Yeung. And of course, from Wiltshire in the UK, Paul Donovan. Thank you all. And that's our show for this week. There's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has entire episodes for you to catch up on. That's it for this edition of Counting the Cost. I'm Sami Zeidan from the whole team here. Thanks for joining us. The news on Al Jazeera is next.